Daily Fiscal Pulse for the 24th of April, 2026. We're looking at Friday's completed session here. These figures are final, so let's dig into what they tell us. Let's start with what's moving the broader market right now. The narrative landscape is unclear at the moment. You're seeing headlines like Trump discussed Iran's Hormuz Strait proposal with top aides. White House says getting attention. And that's definitely influencing how traders are positioning. The thing about narratives though is they move quickly. The actual flow of money tends to be a better signal. Fiscally, we're looking at a net transfer of $5.0 billion. Standing alone, that's acceptable. What matters more is the directional shift we're seeing. The 5-day flow has effectively cut in half compared to recent weeks. Tax receipts are the main driver here, bringing in $21.3 billion. Equity futures are telling a different story than what the flows suggest. ES settled at 7,195, and it's trading above its 20-day moving average of 6,872. The 20-day range sits about 841 points wide. Despite this fiscal headwind, price action is holding firm. Take a step back and the flow deterioration becomes clear. Daily government spending over the last 5 days is averaging $7.8 billion. Now compare that to the 20-day average of $12.8 billion. We're looking at significantly less cash flowing into the broader economy and financial system. Year-to-date fiscal spending confirms this trend. Through this point in the fiscal year, outlays total $724.6 billion, which is roughly 13% lighter than where we stood the same time last year. That's a notable drop in fiscal support hitting the economy. From a tactical standpoint, fiscal conditions aren't leaning heavily in either direction at this moment. Our conditions gauge reads -14. History does provide some context here. We've encountered similar setups repeatedly, and despite tighter liquidity, the S&P has typically gained around 1.2% over the following month. The market doesn't necessarily follow liquidity in lockstep. But here's the real risk dynamic. With fiscal flows tracking below year-ago levels, the liquidity buffer just isn't there like it used to be. Good news can still push markets higher, but when something goes wrong, whether it's escalation tied to the unclear narrative or some other shock, the downsides can accelerate much faster. There's simply less liquidity to cushion the fall. Notable detail here, we've now had 3 straight days of declining fiscal transfers. Market weakness from that kind of pattern typically shows up with a short lag. Looking ahead, there are a couple of catalysts. The month-end settlement window arrives on the 30th of April and could reshape near-term flows. The individual income tax deadline on the 15th of April remains the single largest drain on reserves in any given year. Fiscal conditions are tight, but what we're really tracking is the severity of the drag unfolding. Keep an eye on the scheduled flow calendar for your next clue. That sets us up heading into tomorrow's session.